Well, good morning, everyone. Thomas Montgomery here. It is a beautiful Thursday morning, January 19th, 2023. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central, to talk strategies, tips, techniques, share success stories, and to support each of you. So we are looking at a close-up, or I guess a semi-close-up view of our standard landing page. And we talked about landing pages yesterday, and we're not revisiting that topic, just clarifying what the source of this information is. So if you're an affiliate, you're automatically given a landing page that looks like this. If you're a white label partner, you might want to consider having one, which we can help you with. You can do it on your own or skip it, but that's not the point. The point is this: we need to be laser focused on being an advocate for the clients. And so let's talk about what that actually means. First of all, we obviously want to find small business owners, and they could be pre-formation, in other words, pre-startup, pre-revenue. They could be startup, they could be existing. But what you and I are really looking for are small business owners, or soon to be small business owners, that are looking for capital to start or grow a business. So that's the who that we want to help. Our approach is innovative in the sense that we don't charge the client anything up front, so that's not a barrier. And we make specific promises. And of course, the client makes promises too. But one of the promises that we make, regardless if the client's coming through the affiliate track or through your white label partner track, is that we're going to help them get a material amount of funding. Now, will all that funding occur immediately? Will all that funding occur in one tranche? It might, but it might not. We can't make that generalized statement. That would be not true. That would be unsustainable to go out and tell the world, hey, just sign up and you'll get $100,000 before 5 p.m. today. That sounds a little shaky to me. So that's not the promise that we make. The promise that we make through our standard agreements. Now, if you're a white label partner, you could be editing it and maybe you're making a different promise. But our standard promise is we will take clients from where they're at and help them move to where they need to be to qualify for at least $100,000. The question inevitably comes up, well, how long will that take? Well, it depends upon the client. I was speaking to one of you, one of our white label partners this morning. And this gentleman's a newer white label partner, so he's still getting his legs underneath him. And he had emailed me last night. I didn't see it last night. I didn't see it until I came into the office this morning. And he's got a new client. Well, I shouldn't say new client. Client's been around a bit. And the client is frankly not too happy. It's like, well, we're committed in 2023 to 100% client satisfaction. Why, white label partner, is that client not unhappy? Why is that client unhappy? White label partner says the client hasn't been funded yet. They're mad as a hornet. Those are my words. He didn't say that, but the client's unhappy. So we go look, and the white label partner hasn't done his job. The white label partner has not collected any of the documents that we need, which is referring to the loan package, this bottom ball here on the shared screen. So there is no funding to be had for that client yet, because the white label partner has certain responsibilities. And one of those is to interface with his or her client and gather the data from the list that the client has. It's not all or nothing. We're not going to create a bunch of bureaucracy so the client's not successful. But in this case, we have an unhappy client from, frankly, an unhappy white label partner because the white label partner isn't doing his job. So one of the things I want to reiterate to each of you, and I told him this morning, is what we offer and we recommend. We can't demand, it's not in the contract, but we offer, we ask, we recommend, let's schedule a weekly call. Each of you that are a white label partner, we have a specific link in Calendly, and we should schedule a weekly call. So that way we go through all the clients. Are they happy? Are they progressing? Any concerns, any issues? How much funding have they received? How much more do we think that they'll receive soon? So forth. So if you're a white label partner and you're not scheduling weekly calls, I think that is a disservice to our relationship, because communication's key, and just catching us always on the fly is not very effective. You're busy, we're busy, not too busy for each other, but if we schedule a weekly call, that works really well, right? And then secondly, that's what I emphasize too, is, if an issue comes up, communication's key, because we want happy, funded clients. So the role that you play depends upon which hat you're wearing. Technically, it depends upon which method that you brought the client in on. If you brought the client in as an affiliate using the free affiliate link, you essentially drive them to your affiliate page, and really you don't have any other responsibility. You get paid at the tail end of the process. In other words, once the client signed up, but you don't have any involvement with the client through the affiliate channel. Super simple. If you're a white label partner, it's much different, right? So you need to make sure, and it's my job to work with you and assist you and support you, of course, but if you're a white label partner, you have involvement with the client, and that means helping facilitate getting the client's paperwork in so we can get that client funded as quickly as possible. Now, we are pulling out all the stops to get clients funded very quickly, very, very quickly. So typically, if we can collect at least the key data from the client, we can typically take them to funding the next day. We had a bunch of clients yesterday that got funding approvals. I'm sure we'll have more today and tomorrow. So let's go through that process. And if at any point you have a question, if you go ahead and type it into the Q&A, it's like a chat box within Zoom, because it's important to know what your role is so we can get clients funded. That's why clients come to us. Do we do more than funding? Facilitate funding, of course, right? We improve financial literacy. We build a loan package. We help them build their credibility. But the truth is, clients come to us to be able to get assistance in getting funding to start or grow a business. And I think there needs to be more focus on that. There needs to be more emphasis on that. And that's our role to help you with that. So from this point forward, I'm going to speak to those of you that are white label partners. If you're an affiliate, you're welcome to listen, of course. Everything's transparent. But as a white label partner, once you have the client under contract, which means you take the agreement template that we've put in your white label partner Dropbox, you edit it as you want, you get the client under contract, and you have the client fill out the funding proposal app. You upload those two into your white label partner Dropbox, and you let us know. At that point, then we can go in, and our goal is within 24 hours, and we're pretty good about that. Sometimes it can stretch a little bit longer, but typically within one business day from the time that you've uploaded the executed client agreement and the completed funding app for that client and let us know, then we can go get funding offers for that client and then be able to communicate that with you. A lot of clients get cash funding offers, which is awesome. Some don't, and if they don't, we have the plan B, we call the 0% financing. We will communicate to you, again, white label partner, where the client sits in terms of their, what we call first tranche of financing. What is the goal of the first tranche of financing? It is to get the client at least $2,500. Now, of course, it'd be great if they got a lot more, but at this point, we've not built the loan package, right? The loan package is important for larger capital raises. If not, we could just take that ball out and have just 2 balls in the funnel, but there's 3 balls. We need to have a loan package to prepare the client for larger capital raises. And also by doing that, we understand their credibility factors and any work that needs to be done. But initially, we're just taking the client where they're at. We have another one of our white label partners, JP, who's on here this morning. He's awesome. He's off to a fast start. One of his clients, JP uploaded as instructed the agreement and the funding proposal app. We took that client to our network of lenders, no hard inquiries, of course. And the lender the client came back and got 1 approval. It's a line of credit, which is kind of nice. It's not as low of interest. Most of us like free 0% interest or single digit interest. It was a little bit higher than single digit. But, JP's asking, well, wait. This interest rate's higher. I forget, it was higher than 9%. I don't remember exactly what it was. So he's like, well, I don't know if the client will like it. And I said, I understand. But what's the promise that you and I, as a white label partner, and us as essentially your back office, what are we promising the client? Hey, you don't have to pay for that refundable deposit up front. There is a refundable deposit, but you don't have to pay it out of pocket. You're going to fill out the funding app, and then we're going to go find first tranche financing for you. And we guarantee it. Now, it might be a little, it might be a lot, but those clients are qualifying for first tranche financing based upon their mitigating circumstances, the way they came to us. Because we've not built a loan package yet. We're just trying to cover their refundable deposit so we can build the loan package and move on. And so in JP's case, what I told him is, I said, JP, if the client doesn't like the one offer that they've received from, again, we did our diligence, right? We shopped it with no hard inquiries, make that clear, but we shopped it to over 40 different banks, credit unions, and alternative lenders. The client received just one offer. And so then the client can either accept that offer, which pays JP, frankly. JP gets the $2,500 for the refundable deposit, and then we can go build the loan package. Or if the client doesn't want it, the client can pay for it some other way. But the client has promised to pay the white label partner, in this case JP, the $2,500, and we did our part. Now, does that mean, some people will infer improperly, well, wait, if this client only got a higher interest loan for a small amount for their first tranche, how in the world are we going to get them $100,000? People think, well, there's a disconnect. Not at all. We're just trying to get enough to get you, the white label partner, in this case, JP, paid, so we can go build the loan package, identify any credibility issues, resolve any credibility issues, so the client does qualify for $100,000. So just keep that in mind, that sometimes people will think that since the client is getting the first tranche of financing, somehow there's an upfront cost, but there's not. The first tranche of financing could be a term loan. Maybe it's $25,000 they get, for instance, or it could be $2,500 they get. I mean, they're getting whatever they qualify for with their baseline information when they have enrolled with us. Maybe it's a line of credit like JP's client yesterday we were just speaking of. Maybe they don't get any cash funding, so we have to set them up on the 0%. The 0% is essentially in-house financing, can't beat 0% interest, $2,500, and they make payments. And so that allows, again, you to get paid, us to get paid to build the loan package, and it's still a refundable deposit. So there's going to be first tranche financing for everyone, but it's a fallacy. Some of you will push back and say, well, let's just skip this first tranche financing. Let's just all work for free and build their loan package. And that's not the proposition. The proposition is, hey, you don't have to pay for it up front, but there is a refundable deposit, which we've communicated to you. It's in writing. We'll help you get financing for it, for whatever you qualify for. And then they can pay for that. And then we build the loan package. And from the loan package, then we understand their credibility. Now, could it be the case that we find that they have some sort of credibility issues that's keeping them from qualifying for the full amount of funding, whether it be 100,000 or $1 million or 10 million, whatever? Yeah, could be. Yeah, that could happen. Well, why didn't we tell the client that up front? Well, we didn't know, right? Until we gather their data, we don't know if they're on track. We'll just simplify it. Are they on track? In other words, do they meet the underwriting criteria for that amount of funding, for that use of funds or not? We don't know. We have to gather the data, right? And once we gather the data, then we can apply our filters and see if they're good to go. If they are, great. Let's apply and let's go. What if they're not good to go? Well, then we need to work on it. Well, we guaranteed 100,000. Well, yeah, we're going to work with them until they get at least 100,000. That's our promise. That's our commitment. No one's taking that away. But you just have to understand that the trigger for clients to get funding is to meet the underwriting criteria. And the role that you and I play together, we're on a team, is to help educate them, help build their loan package, and then to help them become credible. Now, some people are credible enough to begin with. So this isn't some sort of bait and switch. Oh, well, if they're not credible enough, why didn't we tell them that in the beginning? I don't know. I don't know the client. That's why we gather the data. So hopefully that helps. Now, JP, let's continue to use JP as a case study. So JP just chatted me here, or Q&A in Zoom, said that the client ended up getting denied for that line of credit. Okay, that can happen because so the client got a pre-approval for a line of credit, and then the client went through the application process and didn't get a final approval. That can certainly happen. It's not a failure of you, not a failure of me. It's just they didn't end up meeting the underwriting criteria that it appeared they met in the beginning. So what do we do then? It's fine. You need to just let us know via email or through our text. We use text, kind of like chat, but let us know somewhere outside of Zoom. And so that way we can go back and look at other options for the client, because it's not always a scientific exact process. There's a little bit of science and there's a little bit of art. So we can project what we think the client will get approved for, but it may be that they don't get approved for that. And if that's the case, then we go back and revisit and then propose a different funding plan. And that's okay. We'd rather it all be real smooth and everyone get funded on the first app, but that's frankly too good to be true. It just doesn't always happen that way. So JP, just send us a communication outside of this. Let us know what you know about the denial. When we get a denial for a client's application, it's very helpful for you as the white label partner to find out from the client, what did the lender say? Why was the denial issued? Because we need to take a look at that and figure out why there was a denial, because there's essentially an inconsistency. What we thought was going to happen didn't happen. The lender typically will give some insight as to why. And so that is good information for us to revisit, but it's fine. So just because a client doesn't get cash funding for first tranche financing or a big amount doesn't change our goal, our commitment, our intent, or our ability to get them 100,000. It just may mean that they have more credibility issues that they need to work on. All right. So Randy's asking, will this process place hard inquiries on the client's credit report? When we're getting first tranche financing offers through our consortium of lenders, there are no hard inquiries. Thus, it's only a soft inquiry. Therefore, there is no impact to the client's credit score. However, what we should all understand is once we actually go apply, so not just getting offers, but if we actually apply for a mortgage, a car loan, a business loan, that actual application will generate an inquiry. So when I talk about looking for first tranche financing for clients from 40 different banks, credit unions, and alternative lenders, there's no hard inquiries. But once they lock in on one and go ahead and apply, most lenders will do a hard inquiry, of course. Thank you, Randy, for that question. All right. Let's see. Who else has questions on this topic? Because if there's something in your mind that it doesn't seem quite right or it doesn't click, then this is a great time for us to discuss it and share it. Because typically, if you'll ask the question, then we can discuss the reason why or how and resolve it. And then we're probably going to all be shaking our heads saying, well, that makes sense. But it's if you don't know something and you start making wrong inferences, that you can frankly conclude wrong information, and that's not good for anyone. And certainly we don't want to conclude and communicate to clients wrong information. All right, so Alfred's got the next question. So he says, okay, he has a client that signs up, completes the agreement, completes the funding app. We run the offers and the offer or offers that the client receives for first tranche financing is not acceptable to the client. So this is not too dissimilar from what we were talking about with JP earlier. Now Alfred's asking, I think in a more general sense, what then? Well, you want to go back and look at your agreement. What does your agreement say as a white label partner with your client? Because we always need to follow our agreements. I think sometimes, and this is not about Alfred. Alfred's very sophisticated, but some people I deal with, they feel like agreements are like optional. But no, the agreement should be the guidelines, the boundaries that we're following. So what the agreement says, as I stated earlier to the client, is, hey, there is a $2,500 refundable deposit that covers the cost of us building your loan package. You don't have to pay for it up front. We'll go look for funding offers for you. You agree to accept at least one of those to pay. And if you don't, client, accept one of those offers, then you're responsible to pay for it. And I think that's fair. That's how the model works. That's how we present it. That's how it's written. So back to Alfred's question. So if he has a client that signs up, doesn't like the offers for first tranche, client does not have to accept any of those. The client can just say, no, Alfred, I'll just pay you the $2,500 because I don't like those offers. If the client doesn't accept one of the offers and then doesn't pay you, Alfred, the white label partner, then the client is in breach. And so you need to work with them to try to resolve that, because now all of a sudden they're not doing what they promised to do. Hopefully that helped. All right, so who else has questions regarding the promise that we make to help clients get 100,000, what your role is? All right, so Joseph's asking about the question or the topic earlier. So again, if you're a white label partner, once the client has paid the refundable deposit, either in full or on a payment plan, as a white label partner, Joseph, your responsibility then is to help that client collect the documents. And, we can set up a separate Dropbox folder for that client, but what many of you have preferred is you've just set up a subfolder in your white label partner folder, and you're just getting the documents from the client and putting it in there. It's up to you, but that's what most of you have decided to do. But the bottom line is, if you're a white label partner, your responsibility is to interface with the client and collect the documents that they do have. It's not all or nothing. Well, what are the documents? Well, you should be familiar with that. If not, let us know. We can go through that again. But it's things like tax returns, bank statements, financials, business plan. Oh, wait. The client's brand new. They don't have any of that. Well, that's what it says, right? If they don't have it, they don't provide it. We're not setting up some barriers for people to fail, but we don't know what each client has. So you, as a white label partner or someone in your team, interfaces with the client to be able to collect what they have. You let us know, and then we can review it and get them to funding as quickly as possible. We want to get these clients to funding within a week. And in most cases, we can if you engage and do that part. All right, Pierre's asking, and Pierre, you emailed me earlier, and I've already responded via email, but I'll answer for those of you that are affiliates. So if you're an affiliate like Pierre, and you have a landing page that frankly, looks like this, but it's hard-coded to you here. If you go into your back office and you don't see any commissions earned yet, that means that any of the prospects that you sent to your site either didn't become a client and or didn't yet pay their deposit, because the trigger for affiliate payout is once a client's paid their deposit. Thank you, Pierre, for that. Okay, Carrie's asking a very good question, and thank you, Carrie, for asking. So she wants to dig into that 0% offer more. So this is a good one to wrap up on. So what did we say? We said that we promised the client there's no upfront cost. But what we didn't promise the client is, hey, you won't have to pay back money that you borrow, right? If you get financing, whether it be a term loan, line of credit, extension of credit, of course, there's going to be repayment terms, right? Carrie knows that. I know that. All of us know that. Now, what are the repayment terms going to be? It differs. It's based upon whatever financing terms were offered to the client that they accepted. So will the client incur debt by going through the program? Let's step back all the way. When clients come to you and I, Carrie and everyone else, they're coming to us wanting debt. They want to make payments, right? Because it would be inconceivable that someone would come to you or I, expect 6 or 7 digits of loans of debt and not have to pay it back, right? That's unrealistic. So we already know the client's mindset is, hey, I want to take on debt to start or grow a company. And that's called leverage. That's not a bad thing. We've had different discussions. So it's not consumer debt. It's for business purposes. So they know they're going to have payments. Now, they don't know when they first sign up what those payments will look like, nor do you and I, right? We've got to go through the process. So specifically to Carrie's question, so first tranche of financing, they come in, they fill out the app, and we don't get any cash funding offers for them. Well, that sucks, but it can happen. Doesn't mean the program won't work. Just means that we're going to need to go to the 0% financing for the refundable deposit. Well, that's the cheapest money you can get, right? Is 0%. Now, some people are not very financially literate, so they'll say, well, wait, what did I get? I never received that $2,500 for the 0%. Well, of course not. You're financing the refundable deposit that you promised to pay. It's like if Carrie, you and I went down to the car dealership and we financed a new BMW 7 Series for $140,000. Do they give us $140,000 in the trunk of the car and the $140,000 car and we drive off together? No. You're financing the car. You don't have payments on the car. So the 0% is not a cash advance loan. I mean, we could do that. We've had these sarcastic conversations with some people who are like, well, I never received the $2,500. Well, the $2,500 is for the refundable deposit. Well, I never received the $2,500. Well, it's the deposit for the refundable deposit to build your loan package. What's the client want? Does the client want us to wire them $2,500 so they can go to the bank the next 5 minutes and wire it back? Right? That makes no sense. They're financing the refundable deposit for the loan package. So there's always a first tranche. Now, the form of the first tranche, it could be a loan, normal loan. It could be a line of credit like JP's client, or it could be just financing. But we need to get first tranche financing to get you paid so we can go build the loan package to go after their large capital raise. So the 0% is a first tranche. It's just not a cash disbursement because they didn't qualify for it. We want clients to get cash funding for their first tranche. We'll do our reasonable, diligent effort to do that. But if they don't qualify, then we go to the alternative. And I can tell you now, while we do see a few business loans still at 0% because they're subsidized, typically first tranche financing won't be at 0%. So if they do qualify for the 0%, it's actually great for the client because they're not paying any interest fee. They're only paying principal. The principal is the $2,500 for the refundable deposit that you had promised to pay at the time of contractual agreement, and they still get that back. So they do have to make payments on it. But it's weird. You'll see some very unsophisticated clients when someone's like, well, wait, I have to make payments? It's like, what the fuck? What do you think? How in the world do you think you're to come to us and go get 6 or 7 or 8 digits of debt and not have payments? Of course you're going to have payments. Now, in this case, it would be making payment 0% for the refundable deposit, but hopefully that answered that, Carrie. So the 0% is, of course, first tranche. Anyone else have questions, comments, concerns on the value proposition? Because what you and I do is amazing. We're going out and helping people that others aren't helping. We're helping people that are sometimes subprime, that are sometimes not as financially savvy. Those individuals that can't go down to Wells Fargo or Bank of America and go get a $100,000 loan today. We're working with people regardless of what their starting point is. Credit's not so good, not a problem, sign them up. Capacity's not so good, not a problem, sign them up. No collateral or collateral shortfall, not a problem. Sign them up. We can work with them on any of these three areas, as well as building their financial literacy, as well as building their loan package. All right, so in summary, let's be aggressive in going out and enrolling clients and helping clients, being their advocates, helping them get the funding that they need to start or grow. If you understand the process and you follow the process, it works really well. If you make false inferences, then that's no good for anyone. So if you have questions, let us know. And that's why we get together 5 days a week, 20 times a month, about 250 times a year, is getting together like this to vet through questions, concerns, or issues. All right. Thanks, everyone. We'll see you soon. Thank you. Bye-bye.